Hi, Kelly Eckholt here to update you with the key events of the week. So the theme of the data this week were ones of rising signs of economic growth as well as building inflation pressures. A real highlight was the release of the Purchasing Manager Indices, which suggest that both the services and manufacturing sectors are pointing us towards quite strong growth as we went into the fourth quarter of last year and coming into the first quarter of this year as well. Basically, it's looking like that 2 to 3% economic growth level is really beckoning about now. At the same time, we've had to increase our inflation forecasts, and we think that CPI inflation in the year to the end of 2025 will remain at 3%, and it's increasingly looking like a big fall in the rate of inflation over 2026 all the way down to 2%. It's looking increasingly unlikely. We got some quite strong tourism arrivals data this week, which showed that tourism arrivals are up 8.5% year on year, and it's Kiwis living overseas coming back for a holiday as well as Australian tourists that are really driving those trends. Basically, that tourism sector now is back at about 93% of pre-COVID levels. On the other side of the coin, we saw household spending just tick back a little bit in December, but that came after that really strong rise that we saw in November. And what that's telling you is that Kiwis are now doing the Christmas shopping in the Black Friday sales as opposed to the traditional Boxing Day sales. We also saw the housing market data for December again track sideways in terms of prices, where we're seeing that the regional centres are still quite strong, but particularly urban centres like Wellington and Auckland are still quite weak. All of this is boiling down to signs that we're going to see higher interest rates through 2026. Our forecasts of a December OCR increase are looking more than odds on right now, and financial markets have got 1.5 interest rate rises priced in for 2026, which I reckon looks fair enough if the data flow is going to continue on like this. At the same time, we're seeing the exchange rate just start to rise a little bit as markets are pricing in those higher interest rate expectations. And that's been supported a bit by some US dollar weakness due to Donald Trump making a lot of noise about Greenland and tariffs right now. I'll be back to update you again next week.